Hi guys, welcome back to TipRanks. My name is Annika, and here at TipRanks we love to hear what you guys think of different stocks you're looking at and your opinions on the market sentiment. Well, 2022 is a brand new year, and in this video we're going to be looking at 3 strong buy oil stocks that are likely to outperform the market in 2022. In this video, we're going to look at 3 strong buy oil stocks that are likely to shine in 2022. 2021 may be the year that is remembered for the strong recovery we saw in the oil markets. With oil prices hitting negative values in 2020, we actually saw the S&P 500 Energy Sector Index increase by 50.6% in 2021. The upward trend is expected to continue into 2022. This is owed to the global economic recovery and the improved end-user fuel use. Furthermore, the US government announced a $1 trillion massive infrastructure program. This can be a big driver for the US markets, resulting in higher crude prices. Though the new variant has raised concerns on oil demand recovery, these worries are slowly dissipating as the new variant is deemed as less dangerous. Alongside this, existing vaccinations may be considered successful in neutralizing this variant. This is why oil stocks are positioned to do well in 2022, with strong fundamentals and improved global economic recovery. The first stock we're looking at is Chevron, and its ticker is CVX. Chevron is one of the largest oil companies in the world, and it's also one of the best positioned integrated global oil companies. It is expected that Chevron will have a long-term production ramp-up. The current price for Chevron is $124.49. The analyst rating consensus is a strong buy, and the analyst price target for CVX is $136.14. This is a 9.36% upside based on 16 Wall Street analysts offering 12-month price targets. The company has one of the greatest project pipelines in the business, given its prime position in the lucrative Permian Basin. With its purchases in the Permian and Marcellus Basins, the organization has positioned itself as the second biggest oil corporation in the US. Chevron is also regarded as one of the top dividend stocks because of its solid financial position and cash flow generation capabilities. The firm has sufficient liquidity to continue paying quarterly dividends to its stockholders, as it has done in the past. During the third quarter, this oil giant paid a total of $2.6 billion dividend, and it produced $6.8 billion in free cash flow. The dividend amount per share was $1.34, with a dividend yield of 4.25%. Last month, the company unveiled its capital strategy through 2022. It forecasted $15 billion in capital and exploration expenditures. This was up 20% from 2021 levels. On other positive news, Chevron announced that it will expand its share repurchase forecast between $3 to $5 billion per year. This signals confidence in the market and can be positive for price increases. Chevron announced its third quarter 2021 results, where it reported earnings of $6.1 billion. It reported a cash flow from operations of $8.6 billion, and they reported a record free cash flow of $6.7 billion. They also had share repurchase of $625 million. The third quarter earnings were the highest since the first quarter of 2013, and this was largely due to improved market conditions, strong operational performance, and a lower cost structure, said Mike Wirth, Chevron's chairman and chief executive officer. The second oil stock is EOG Resources, and its ticker is EOG. EOG is a significant upstream energy company. They have activities in a number of lucrative areas, which include the Permian Basin. The Permian Basin is the most prolific oil resource in the United States. The company's operations are spread across the United States, Canada, China, and Trinidad. The current price for EOG Resources is $97.74. The analyst rating consensus deems it to be a strong buy, and the analyst price target on EOG is $116.33. This is a 19.02% upside based on 18 Wall Street analysts offering 12-month price targets. The firm has strong growth potential. It also has a large inventory of drilling prospects, strong returns, and a well-disciplined management team. It also owns a lot of land in oil shale areas, including the Permian, Bakken, and Eagle Ford. EOG Resources has extensive undrilled premium sites in Delaware. On the financial front, EOG Resources reports an excellent third quarter 2021 results. They raised their regular dividend by 82% and they declared $2 per share special dividend. Their earned adjusted net income was $1.3 billion, which was around $2.16 per share. They generated $1.4 billion of free cash flow, and their capital expenditures near low end of guidance range was driven by sustainable cost reductions. Their oil and NGL production was above high end of guidance ranges, and their total per unit cash operating costs were below guidance midpoint. The CEO, Ezra Yacob, said that EOG delivered exceptionally strong earnings and free cash flow in the third quarter, driven by our double premium investment program. We extended our track record of reliable execution with better than expected production, capital expenditures, operating costs, and product prices. Looking at the company's dividend history, they increased their regular dividend by 82% to $3 per share, and they had a special dividend of $2 per share, which was declared. EOG's oil prices should continue to benefit from rising oil prices and higher production. The third strong buy oil company is Pioneer Natural, and its ticker is PXD. The company is a major upstream energy company, and they specialize in the Permian Basin, Eagle Ford Shale, Rockies, and West Panhandle. The current price for Pioneer Natural is $198.49. The analyst rating consensus deems it to be a moderate buy. The analyst rating consensus was a strong buy, but it's been recently downgraded to a moderate buy. The analyst price target on Pioneer Natural stock is $231.68. This is a 16.72% upside based on 19 Wall Street analysts offering 12-month price targets for Pioneer Natural. The business recently completed a $3.1 billion asset sale in the Delaware Basin, making it a pure-play operator in the lucrative Midland Basin. Looking at their financials, Pioneer Natural is abundant with cash. During the third quarter, it generated $1.1 billion in free cash flow. The corporation also boosted its base dividend by 10%, bringing it to 62 cents per share, which is around $2.48 per share on an annualized basis. They also divested Delaware assets for $3.25 billion, and this is expected to close before year-end. They also had dividend payments from Q3 free cash flows of $3.58 per share. This was around $3.02 variable, which will be paid in the fourth quarter. Pioneer Natural's production prospects appear to be promising. Total production is expected to be in the range of 613 to 619,000 barrels of oil equivalent per day in 2021. This is up from 367.3 thousand barrels of oil equivalent per day. Oil production is expected to range between 356 to 359,000 barrels per day. So guys, those are the three strong buy stocks, with the third one downgraded to moderate buy, expected to flourish in 2022. Let us know what you guys think of these three stocks in the comments below. We love to hear from you. And if you made it this far, don't forget to hit that like button and that subscribe button and that bell notification so that you get informed on when the TipRanks channel releases a video. Remember, this is not financial advice. Make sure you do your own research. I'll see you guys in the next video. Bye!